Hey, everybody. I hope you had an amazing 4th of July weekend. Um, we spent it here locally. We were not up in DC. I'm actually glad we were not with the weather conditions and all the things that ended up happening up there and all the delays. But I did see the fireworks show online. And if you haven't got the chance to look at that, I'd highly recommend it. It was a really beautiful display that they went through and did up there. We went to a local park and just had a really good time. Great concert, great fireworks, and didn't have to deal with all the weather or the crowd. So it was absolutely perfect for us. But let's talk about the week ending July 3rd, which, that goes through and close out the second quarter of this year, or basically half the year is now in the book, right? And it ended up with, really quite a turnaround story. After a rocky start, from the driven by the tension in Iran and the higher energy prices, the markets rebounded really quite quickly as everything started to calm down. The S&P 500 posted its best quarter in 6 years, and several other of the major indexes, ended up near record highs. So with that being said, though, the last job report gave us something to really think about. Job growth came in well below expectations. And while the unemployment rates dropped, that mostly was because fewer people were looking for work, not because more people were hired. So where does this really leave us? Well, inflation is still elevated. Oil prices could shift, either way, again, depending upon how things, unfold overseas. So let we're watching this to see how this mixed signals, are going to work with each other and how it's going to kind of play out over the next few weeks as to whether the Feds are going to look at, needing to raise the interest rates, or maybe inflation will start to drop all on its own. But, until that kind of flows out for us, I'll say, that's all I have for this week. And until next week, be safe.